Um, oh gosh. Good to meet you all. Andreas here. I'm an investor at CommerzVentures. We are a fintech focused fund that is based in Europe, investing primarily at Series A and B. Currently investing out of our third fund, which is a 300 million euro vehicle that we are actively deploying. We have backed a bunch of category leading unicorns in the space, including Marqeta, which IPO'd a few years ago on the NASDAQ. eToro, also one of our early investments, which will hopefully IPO this year, which is very exciting. Many Pets, the pet insurance unicorn in the UK, and Mambu, also core banking software as well. So a whole range, B2B, B2C, as long as it's fintech, we will do. Very excited to hear the pitches today.
That's great. Thanks so much, Andreas. Marcello.
Hey everyone, nice to meet you. Marcello from Fidelity Ventures. So what we do here is we invest in fintech at Series A, Series B stage, with tickets usually between 5 and 15 million. We invest on the balance sheet of Fidelity, and we mainly focus in things related to the world of Fidelity. So asset management, wealth management, capital market, digital asset, anything that can sell, can partner, or have some sort of partnership with Fidelity, something we can look at. It's a vehicle that started around 7 years ago. We backed companies like Moneybox here in the UK, Moonfair in Germany, DriveWealth in the US, and many others in the more like data, asset management data and capital markets. So yeah, happy to hear the pitches. I saw some great startups, so looking forward to hear them.
Great. Thanks so much, Marcello. All right, now we can start with the first presentation. So by the way, all the other people invested in the audience, you can also use chat to interact with the presenters. If you have any questions or comments, just feel free to use chat or just introduce yourself for networking. Feel free to do that as well. All right, so the first presentation, first company is FeenPi. Elaine De Vera, a CEO and co-founder of the company, will share the opportunity with us. Ellen, you can share your screen and start a presentation.
Yes. Let me know when you see my presentation. Hi to everybody. I'm very glad to be pitching FeenPi here. Can you see it?
Not yet.
Not yet. Check back. I required, yes. Okay. Now?
Now, yes.
Okay, fine.
So you have about 5 to 6 minutes, then it will be 6-7 minutes Q&A, and you can start when you're ready.
Fine. Okay. We Intellitech, we are delivering Intellitech because we are humans, but we put intelligence into the technology, and we are targeting the business financing and investing. It's important to understand we have two legs, financing and investing, because we're turning receivables into cheaper liquidity on one hand, and excess of cash into alternative investment with attractive yield on another hand. So the concern in the market, basically, it's nothing new, but it's very interesting to understand clearly. The liquidity is very expensive today in the traditional incumbent offering. It's very difficult. It's not easy to onboard. It's invoice by invoice. It's debt. You pass the relationship of your customers to your banker. On another hand, there is no market of short term with yield based on low risk because it's real economy. And in the middle, the incumbents like banks and insurance are limited. It's one, I don't know if you know that, but less than 1% or 2% of the market of the businesses are using the factoring, which is the traditional financing of the short term. And despite that, the trade finance is 80 trillion. It's huge. So there is space for something. How we do the magic? We gather a bundle of invoices, which is the basic unit we use. We tokenize, we validate, we control, we put on a marketplace, which is in the case, this case is a fund. We have a pan-European fund organization to set up to be delivered throughout Europe. We have having discussion in the US too with big players, but the first target is Europe. And so we offering these lines of millions to investors that are investing in the fund itself. So, and we agilize and we orchestrate all the processes. We have two use cases that I want to share with you. One, to give you an idea of the size. It's in both cases two companies. One company is an energy company willing to be financed by a monthly flow of 20 million, more than 200 a year. On the other hand, is a cash-rich company willing to be offering the financing to their ecosystem of supplier, and we orchestrate all the processes in between, whether on a fund on one hand or directly on a white label platform dedicated to the corporates, public services, or banks. We have the MVPs, a roadmap, including AI that we are starting to deliver, the modeling, at least for risk management, fraud management, and more. The companies in general are looking at us for three axes. One is requiring willing to be financed. It's always the short term, okay? On another hand, they are cash rich and they want to be investor. And on another hand, as I explained for the use case, they are willing to support their ecosystem of partners, business partners, or suppliers. Something important to understand that we share the value proposal to all the players. We deliver more business for the banks and the insurance. We broaden their market without taking risk, which is important. They don't load their balance and they are not mobilizing capital. On the other hand, it's in a ranking of 2 to 5 times cheaper than any other financing. There is no limit. In investors, it's a low risk, whether I mentioned, based on real economy. And that's it. The market is huge. I mentioned here it's cross-border by nature, including worldwide, even if we start by Europe. We deliver and we are on the process of funding for the technology only, and we deliver through different channels, or either directly to the corporates of the banks or public services. We are speaking with ministries of finance in countries, or directly with fund. The model is a SaaS model platform, but we are introducing our magic is during the process of a proposal, we introduce the volume, which is important. And we are about 40 people in the ecosystem now, 6 partners in between, which we have one of the biggest global bank in the world. And you have the team. Finally, if I want to close here, it's feel free to connect either on LinkedIn or just drop me an email. And that's it. I'm happy to answer any question.
Great, amazing. Thanks so much for the presentation. Douglas, would you like to start? Do you have any comment or question? Douglas.
Yes, sorry about that. So you're bundling invoices. Will you create categories either of risk or certain kind of
Yes.
exposure so that investors
Yes.
can kind of pick
Yes.
and choose where they want to invest?
Yeah, risk sectors, typical size of the companies, a couple in between issuer and debtor. So we have different classes we start by energy, deep techs, laboratories, things like that. We have a thesis for the investment fund. And I forgot to say that we target 3 billion in 3 years. First customer is coming with more than 200 million.
All right, yeah, Marcello, you can go ahead.
Yeah, if I can ask, if you can touch a little bit on the financial, you just mentioned 3 billion in 3 years. What's your strategy in terms of channels and how do you plan to originate, basically?
Yeah, okay. We have plenty of channels. One we try to get in is the bank. It was tough. It's still tough. We are speaking with lots of banks. They are very interested. but they want us to be more mature, let's say. We have been doing some P&L with one of the global bank, the biggest bank, which is providing. The pitch is: would you be interested for each tranche of 10,000 customer companies that we provide? We generate 60 to 80 million new revenue with 19 plus net profit because they just distribute, they don't take the risk. So we have been making a P&L of or close to 1 billion for one bank and others. But we have the beauty of it is two sides. One, we have brokers that are bringing securitization for up to 6 billion. And the second thing, we have the fund, which is regulated and passported in Europe. So we distribute ourselves. So we have banks coming in now, knocking at the door and asking us. I said we would be willing to be partnering with you, but we don't need them really because we are regulated through the fund.
Got it. And is there a market where you want to focus more in Europe?
And I forgot to say, sorry, the corporate itself, the one who is willing to offering the finance services is a distributor because he's opening. We are speaking to a public company in Europe having 33,000 of providers of suppliers, and they say they would be, and they have about 500 to 1.2 billion in cash. So they are very interested as an investor in providing the financial services for and ministries and public services too, because they are having problem with factoring today. There is no adoption of the market for that. So it's very important to understand it at scale. It's huge of millions, and we don't take invoice by invoice, even if we tokenize all the invoices.
Thank you, Marcello. Andreas, do you have any question or comment?
I just want to spend a little more time understanding your strategy to access, for example, you said energy as a particular kind of sector that you're going after. Can you spend a bit of time detailing how you're getting to those individuals? Because you're basically bootstrapping two sides of a marketplace, right? And you talked about the banks on one side, right? But understanding your strategy to get to energy companies or wherever else it is you're going to in a bit more detail would be helpful.
Yeah, because the market is so huge, and we have a fund, we have set up an investment strategy on the fund, okay, to attract the investors because we are making a matchmaking in between. So we found a broker who is a B2B broker having customers in the energy sector, and it's booming here because it's trendy. So we just 5 customers with 200 million in a flow of transactions would be enough to fill the first year. It's 1 billion per year. So we can virtually deliver to any sector except some tougher because they have some milestones to deliver first, but and risky. But virtually we can follow up the whole economy. That's why at first we were thinking about an exchange, and the reason why we were in touch with the exchanges globally, and it's still pending, but it will be the last step in the development.
Great, thank you. Any more questions?
Including exchanges in the US.
Oh yeah, we have very few time, so about a minute. So if you have any more questions, people to do that. Otherwise, you can maybe just make your final words before we go to second presentation.
Maybe just one more question from me. Have you raised funding yet, or where are you with that?
Nope. But we had, tokenizing, setting up the whole processes. We are funding 3.0 in Europe. So said by our fund managers, the auditors, the depository banks, and they are saying we are something that has not been done elsewhere. So it's totally new. So we have regulation. We were writing part of the new MiCA regulations because we are generating like NFTs. it's out of assets. It's not really, it's receivables. So it's different from what existing. So it took time to leverage the maturity of the market and regulators, but now it's definitely in.
Amazing. Yeah, thanks so much, Alain. It was great to hear. And everyone, feel free to reach out to him after the event to learn more about it. So thanks so much. It was a pleasure to have you with us.
Thanks to you.
Thank you. And now we can move to the next presentation. The next company is Radivision. Mona, CEO and founder of the company, will share the opportunity with us. Mona, people to share a screen, and yeah, you did it. So you can start when you are ready. Mona, we cannot hear you right now. We see your screen, but you are muted now.
There we go.
Yeah. Now we can hear you.
Okay, fantastic. So I'm Mona Defraoui, CEO and founder of Radivision. And we are an AI-driven social streaming platform empowering individuals to invest in startups and IPOs. I've been part of 12 startup teams over 3 decades. And the first 4, I managed their IPOs, the last 4, founder and CEO. And I previously built the first private market platform for institutional investors that launched the unicorn investing trend. That company was acquired and recently spun out as the NASDAQ private market with Goldman Sachs, Morgan Stanley, Citi, and many other banks all investing. And now I'm back to complete the mission with Radivision, this time reconnecting individual investors who together control over 170 trillion in assets under management globally, out of which around 22 trillion can and should be allocated to alternative assets, which include venture. And all of venture, to give you a sense of scale, has only 1.3 trillion in assets under management. So this has the opportunity to massively transform our ecosystem and change it in a tremendous way. The problem we're solving is that startup funding, liquidity, exits, and returns are broken. Most of us in the room probably know this because we're behind the curtain. And there's also a lack of wealth access for individuals. So one solution serves all the needs of all the parties. Our solution leverages technology and content to efficiently connect hundreds of millions of individuals to great startups. Human stockbrokers used to do this before the late 1990s when the economics changed and individuals were abandoned, which coincidentally is around when IPOs stopped working and everything went super large. And so we're bringing the individual investors back, which will help increase liquidity and connect a new source of funds. This is my 3rd time connecting a new source of funds to this ecosystem, so I feel very confident about what we're doing. And our solution is that we've built a media-grade streaming platform. We already have over 50,000 content assets, and we will be launching our new Angel Wallet app in Q2 to accelerate viral growth. So while most streaming companies depend on advertising or subscription for revenue, Radivision's core revenue is investment lead generation, which, as you can see from these comps, is a multi-billion-dollar potential business. So similar to how ESPN is a media company covering the world of sports and referring the regulated sports betting to DraftKings and Caesars for billions in annual revenue, and now ESPN Bet, Radivision is a media company covering the world of startups, and we will refer our regulated investor lead generation to our version of DraftKings and Caesars, and also to the companies directly. But of course, the money will be coming in passively and so much faster. They're all going to want to have broker dealers and other representatives that they're working with. So for example, and this slide, I did it 3 years ago, but you can see Fidelity's at the top of my list on the right-hand side are customers, and we would love to start referring you 10,000 new self-directed IRA customers a month or more, starting from our upcoming launch, because this is an avenue for the individuals to invest through. So the AI in development now soon will qualify, match, and also has the ability to aggregate large groups of individuals into capital pools of interest like 10 million, 100 million and more, and be able to participate alongside large institutions for everyone to grow wealth together. So we've generated over 500,000 in pre-launch sales value in original content licensing and also through sponsorships. And these have all come from ecosystem vendors like TriNet, SAP, and others. So we didn't even really expect this, but it came through very naturally. And while we have many revenue channels, apologies for the typo there, I'm just noticing, but we are highly focused on our pitch plan. It's SaaS subscription and also our self-directed IRA referrals for 2025 revenue. So we aim to deliver a minimum of 5 million in revenue this year and see a clear pathway to $500 million within 5 years. Our go-to-market strategy to reach millions of individual investors, to launch with our Angel Wallet app a national campaign where we will ring the bell of the stock market, as I did back in 2009, to announce the new IPO, which really is bringing back the public in the initial public offering. They've been cut out for 25 years. And we're going to showcase 50 top startups in our Angel Wallet app and our Pitch Planet platform. So based on our beta test, we aim to deliver a minimum of 1 million monthly visits and 5 million video views just from our Pitch Planet subscription revenue alone. So we basically bootstrapped our own marketing budget through our customers. But we have millions more opportunity coming from the sponsor, influencer, and other marketing activities that we have planned. And I see our time is running out, so I'll go quickly. We have incredible rockstar senior leaders that have joined me. Gina Kwong, who is a growth and marketing expert, coming most recently from years of growing Rocket Money, and Erica Abrams, who's a co-founder of one of the top IR firms in Silicon Valley with lots of investment and private equity expertise. We have a small team, small but mighty, of part-time and full-time folks coming in the process of negotiating with a CTO and an active engineering team to help us scale and grow. We have an incredible team of advisors from Sony, Disney, Nielsen, the SEC, the White House, Wall Street, very active in helping us. And we formed a lot of partnerships and very focused on self-directed IRA. So we are raising our first equity seed round now, but we do have a $50 million top global international investment firm interested in a Series A of 50 million after our launch. So they've been tracking us very closely for 6 months now. And I'm happy to answer questions. Thank you.
Great timing, Mona. Thanks so much. Marcello, would you like to start? What do you think?
Sure. I had a few questions, like maybe starting from the platform itself, like what type of content is there and produced by whom? And then the other side of the question, who is the ideal user?
Yeah, so thank you for that. So this end slide shows how we started. So we started more, with an ESPN, Netflix model. We have over 13 original shows, but we're not focused on that. It's obviously a very low margin, but it's a way to engage. It's content that engages and brings people into the platform and grows communities. But we really have original, curated, and user-generated content. So with Pitch Planet and through the social network part, it's all user-generated. So we've produced 70 original episodes, but we have 50,000 pieces of content that are mostly curated. And this is free. And we've also developed content partners. These are all folks, out there creating content, webinars, growing communities. So here for our Sheconomics women founder community, it was already, a good community to come into. And we are distributing their content, helping them grow. And there's a synergistic and amplification effect by bringing everybody together. So rather than everybody struggling to get followers, we can grow a large community that supports everybody in the ecosystem. And then, of course, all the companies that they're helping can be promoted. And I'm sorry, the second part of your question.
Who's the ideal user that will like?
Yeah. So we have multiple users. Obviously, we're a network like Uber drivers and riders. So we want the startups involved. Obviously, they're all pretty desperate to raise funding. So it's like shooting fish in a barrel to get a startup involved. And they can come in and do, most everything for free. And then our Pitch Planet SaaS subscription can start at $300 a month and grow to, that's the basic, and then $1,000 a month on up. And this is IR. We're teaching companies that from your very first pitch, you started your IR program. It's not something you do when you go public like I did from 91 to 2000. Companies went public in 3 to 5 years, but you have to take it as seriously as you do your AWS or your other subscription products that are absolute utilities to your company. So the startups are users, but our customers and the folks that we've targeted in our previous campaigns, which have all gone viral, by the way, we've gotten outsized results, and Facebook came to us and told us, you're getting 14% response rate, whereas the usual is 1 to 3%. But we're going after accredited investors who are expensive to get and also financially savvy investors. And we expect there's large groups of individuals who are into speculative investments, crypto, sports betting, and so on. So out of this 87 trillion of US retail investor assets under management, there's probably only a couple of percent that are even aware that this asset class exists. Most people are desperate, with inflation and everything else, to create more wealth. And so they're trying different things, but with very few avenues. So we want to go after, the ones who are active and speculative first, and then obviously financially savvy folks, and then soon everyone. And we are an international and global platform, not just US based only. And we think there's probably going to be more interest internationally because there's limited opportunities internationally, limited access to deals.
And so you're going after, I would imagine you're competing a bit with the crowdfunding.
Not at all. We're supporting crowdfunding, because crowdfunding,
Okay.
they're basically all lawyers or broker dealers executing the transaction, but they really don't do marketing. That's the part that's missing. And that's the part that's been missing. So investor relations is financial marketing. It's been part of my title and part of my job since '91. And so really we're marketing and referring to crowdfunding platforms. They've paid us in the past for some of our beta tests to be involved, and they're desperate to bring people in there. So all of crowdfunding has barely done $1 billion in business. It's been pretty flat for the last 3 years. This is pure 24-karat gold approved SEC legislation, and yet it's barely moving the needle. It took 15 years to get here, and there's only 300,000 investors who invested in crowdfunding last year. I'm on the board of the Crowdfunding Policy Association. The part that's missing is the sales and marketing. So we know from 15 years of Shark Tank, as much as we all professionals hate that show, it's a 15-year phenomenon. One pitch, millions of viewers go to their laptops, buy millions of dollars of product overnight, download millions of apps. And this is their only way of interacting. And we basically have leveraged the Shark Tank effect and created the third click, which allows them to also invest. So we want to remain a media company. We don't want to be under SEC compliance. Then we can't say a single word anymore. So we will refer that click to, if they have a crowdfunding, campaign going on, great. They can put that URL into their Pitch Planet, and the users can go directly there. And we would love to leverage this legislation, by the way, to be a part of every raise. Why shouldn't there be 20% retail investors in every raise? And they can come in an SPV as one line on the cap table as an institutional fund managed by professionals.
Have you thought of allowing venture funds themselves to market for LPs on the platform?
100%. So I've raised venture funds in the past. I raised a $500 million private equity fund in 2007 for Gene Ludwig, former comptroller of the currency, and he now turned those LPs into I'm trying to remember the name, Canopy Ventures, which is over $2 billion. I think they're the largest fintech investor out there. So yeah, absolutely. So the legislation is going to have to change a teeny tiny bit. So there's about 5% or more, which we have a great administration right now, and a private equity new head of the SEC, and Jay Clayton is back in a different department this time, but he was all about bringing retail investors in. Main Street has been cut out. Private equity has been going after this, but they're going after high net worth only. The technology allows us to get millions of small users, pull them and scale them into higher, capital pools that are of interest to the large players. And I would love to get more venture firms funded as well.
And last question for me, is Radivision going to be on the platform raising money?
And
Yeah,
by the
we're
way,
on the
use your own platform.
Yeah, we're definitely on there
you know-
right now. You can see me on our sign up page. You can see us in Pitch Planet. So we're just telling the story, right? We can't talk about the investment, but if people are interested, they can click the more info button. And then in our launch, some of those blue buttons are going to be directly invest. And then you can cross the firewall and have your conversations wherever the URL, the company's URL takes you.
Amazing. Yeah. Thanks so much, Mona. By the way, time is up, but we will have some questions on the chat as well, and comment. Maybe you may want to look at that. Thank you, Mona. Great presentation. Great to be with us. Thank you. And next company, next presentation is Realizio. Bryce, co-founder of the company, will share the opportunity with us. Bryce, be able to share your screen and go ahead with the presentation when you're ready.
Hi, my name is Bryce, originally from France. I lived for 10 years in Asia, and I'm now based between Luxembourg and Nice. So I co-founded Realize in 2022. We worked in structured finance and digital asset management, where we assist issuers in securitizing real-world assets using blockchain technology. 6.5 trillions are locked in illiquid assets. And just in France, 500 billions are slipping on current bank accounts. Why? It's investors cannot easily diversify their portfolio on one hand, but asset owners cannot access DeFi opportunities. Our mission is to tokenize those assets and streamline their distribution to wealth managers and high net worth investors, unlocking access to digital exchanges and decentralized finance. For that, we have a securitization vehicle in Luxembourg for traditional finance, but also tokenization services out from France. So we want to help to bridge the gap between the traditional finance and the digital innovation by structuring securitization vehicles, tokenizing assets, operating at the intersection of finance, blockchain, and DeFi, so to make real-world assets accessible, like we just heard a bit before, to more people and to a diverse group, not only of sophisticated investors, but also to wealth managers. Now we're onboarding for 75 million worth of assets, being currently prepared, and we will issue bonds in the coming 3 months. Within the asset class, we have now a key focus on the data center industry. I worked there in many years, particularly in Asia, and it's combining at the same time real estate investment, infrastructure, and a lot of new technology. We've seen so many like Stargate in the US, similar in France with AI boom. So for the first time, it's getting a bit more aware to the public. Because I remember the first time I stepped in a data center was, I'm getting a bit older, but close to 20 years ago. And that's really a key. We have also more than 250 million in the pipeline, ready for us to sell and to explain to the people the interest. But the key part, and several people mentioned that already today, is the distribution, because it's okay, it's not so easy to get good assets, but it's there in the market. So in the past years, we really focused on building our network, where now we have strong partnerships with banks, family offices, but also independent wealth manager and high net worth individuals, which are ready to subscribe to this kind of bonds, but also investment. And at the same time, we are planning within the different regulation, because we are under MiFID and MiCA regulatory scope, for the digital exchanges and the neobanks. Why? Digital exchanges today are more towards the crypto, but they are competing with crypto, so they want to attract more clients. And therefore, the RWA investment is a logical diversification for the crypto natives. And on the other hand, we have the neobanks. Same thing, starting with traditional banks. And now they're starting also to promote the RWAs. And through our partnerships and what we've built, we have today access to more than 3 million wallets. Real world asset is a big market, but we want to focus, because of our location in Luxembourg and because of the investors we have, on the bonds market, where up to today, 10 billions already have been tokenized, so circulating bonds. So it's not anymore, it's a proof of concept or whatsoever. Big players and large ticket are getting there. We are focusing and targeting to have within this year 75 million under management. For that, we are a mixed team from capital market, from real estate, from wealth management, but we have also advisors on different regions on the IT, but on the wealth management and on more strategical part, to be very, very close to the family offices and the wealth manager or banks we're working with. Try to be at the center of all the different verticals, not focusing on crowdfunding or not focusing on bigger tickets, but we have set between 5 million to 100 millions and sector agnostic. Of course, we need to have visibility. Last year, we attended a lot of events globally and were invited to speak on a lot of B2B events. From that, we are building our distribution network. That's why today, what is important for the company, but for you to understand also, is how we will generate revenue. It's very simple. We didn't create anything. We are taking success fees on the money we raise and management fees on the capital under management. So this year, we are on the way to have about 2 million revenue. What we are looking for is offering an opportunity to have strategic investors to join us and to invest in the future of capital markets. Why? Is just to accelerate our growth. We are not looking for a lot of money. The reason is very simple, is it has to come by stages. And with the pipeline of products we have, we will be generating good proceeds or good revenues very shortly. So I invite you to invest in real world assets for stability and growth.
Great. Thanks so much, Bryce. Andreas, would you like to start? What do you think about the presentation?
Yeah, thank you. Thank you for that presentation. I mean, my first question is, there are kind of a few players in the space that are trying to tokenize RWAs. How do you see yourself competing against both the startups in the world, whether that's Ondo or Centrifugal Swarm, right? These players that are tokenizing investment products in the long term, and also maybe also the incumbents as well, because you see Goldman Sachs launching its own tokenization platform for bond issuance, etc. Where do you see yourself in the long term competing against these folks?
So to start with the last question,
Yes.
is the size of the issuance. For example, the data center I mentioned, it's tickets of 25 million. Those tickets are not relevant for Goldman Sachs or JP Morgan or other banks because it's too small. However, we are working with larger banks to help those first tickets of 25 million to get into the projects. And when they start to raise 200 million, that is not our scope anymore, and we go on different parts. So for today, that's how it's planned. On your second question. For the first question, we are not a tokenization company. We can do the tokenization. We have the tech. That's what we started with 4 years ago, where we wanted to do tokenization. Today, tokenization is more like a commodity. So we are just enabling people to have access and to put all the dots together. Because when you do just the tokenization is one thing. When you do just the securitization is another. And when you do just the distribution is another one. So that's how we can bundle everything together. And you mentioned some company doing tokenization. To have a concrete case, one of our clients, data center part, wanted the tokenization, did not like the system we had, and preferred the one from I would say competition, which is more a partner. Totally fine. We work with them, we have the same thing. So it is more like when you go in a la carte menu, we can choose bits and pieces. So a lot of tokenization companies actually are coming to us because their business model is to make money doing tokenization. Our business model is to distribute the product.
Right. Any follow-up question, Andreas, or no?
No.
Okay. Douglas or Marcello, who wants to jump in?
A quick question.
Douglas,
so there's an element of a two-sided market in that you've got the tokenized assets on one side, and then you've got wealth management bringing particular clients with certain diversification needs on the other side. How do you balance to make sure that the assets that you have are going to meet the needs of at least in the early days, the needs of the potential investors on the other side?
So we work not both ways. We work from the investor side. We had demands from commercial bank about investing in IT infrastructures. And therefore, we convinced data center operators that they have to tokenize with us. But the tokenization is not the key point. The key point is forget for a bit the tokenization, just it's a bond. And for the investor, they're subscribing to a bond. That's why we worked with Swissquote in Luxembourg. Why? They are a traditional bank, and brokers and traders, they have access to them. So when you go and buy a stock or buy or subscribe to a bond, no matter it's tokenized or not tokenized, it's the same thing. So for now, Douglas, we really put that tokenization as just an advantage. And when we are discussing with banks, actually now we are trying to convince them to give us a bit of the investment they are doing on the bond subscription for the secondary market. Because a lot of companies out there are selling the opportunity of secondary market. But on the bond we have, give you an example, it's 25 million data centers in Europe, 12% per annum. Very safe. And when the people are putting 5 million there, they don't need liquidity. They keep it for 5 years and they are very happy. So we are not trying to solve a problem which is not existing. And therefore, that's why the tokenization is just coming on the top, where it's very, very interesting. And this is, again, attracting and comforting the existing investors, is the collateralization. Because today, when you have a bond, it's valuable. But if you need to leverage it or to do a bridge loan on that or a mezzanine, it's complicated. Whereas through tokenization, you can collateralize it. So that's really, there is no more chicken and egg question like we had a few years back. We work from the demand.
Right. Thank you, Douglas. Thank you, Bryce, for the answer. Marcello, anything from your side? Any question or comment?
No question. Thank you, Bryce, for the presentation. And I really like the approach of going where the demand is. I think that makes a lot of sense. So good luck for the next steps.
Thank you very much.
And yeah, time is almost up. Thanks so much, Bryce. Great presentation. And yeah, thank you. Great to have you with us. And all right, next, let's move to next company, next presentation. FOB.money is the next company. Alex and Vasily will do the presentation to us. Alex, feel free to share your screen and go ahead with the presentation.
Yep. Hello. Thank you for inviting.
Yeah, absolutely.
All right. You can see my screen, right?
Yes.
It's really amazing to be a part of the board of this meeting, because you think you saw everything in the world, but then there is a giraffe around the corner. Really exciting. Thank you for that experience. Okay, so jumping to FOB.money. FOB is freight and board. Maybe you know this, and we are connected to international trade. So we remove the pain of deferred payments for SME exporters in Asia and importers in Europe and United States. So before I founded this venue a year ago, I was a chief marketing officer in one of the biggest invoice financing companies in London. So I touched the clients by my hands, really one by one. And I found out that selling invoice financing to big companies or upper mid-sized companies is a no-brainer. Everything is clear. They have their financial specialists. But if you talk about SMEs, you bump into a problem because the low product knowledge, the product is complex itself, and there is always trust issues into new instruments. So this is a huge segment of market because SME exporters in Asia, they form a huge lump of that export pie. So who is our client? Usually they are small companies with less than 20 million of sales per annum. They usually have less than 50 employees. Very often they're family companies. We target the companies that are at least 2 years in operations and shipping the goods from Asia Pacific to Europe or United States. The average invoice value is quite small. It's from 20K to 400K. And the deferred payment terms are usually from 60 to 120 days. That's like a common practice. So the pain is very clear. I think you understand here. So it's up to 180 days. They wait for the payment. There is no fund for next production cycle, no possibility to grow and expand. And also they have a strong restriction to work with new buyers, and because they are afraid to give the deferred payment terms for the company they haven't ever worked with. So we work in the intersection of two pains. The SME pain is frozen capital, industry pain is uneducated market. And we had a choice. We could educate the markets, and this is like boiling an ocean, and not only for us, but for competitors as well. Or we could convert the product into something, wrap it into something, and talk to the audience in the language they understand well. So we took the latter choice, and we invented a new kind of invoice. We call it invoice with a guaranteed payment on the date of shipment. Or also we call it invoice with a built-in payment. This is like a new essence. And instead of explaining to an owner of the furniture company in Vietnam what is invoice financing or what is factoring, what is invoice discounting and selling a debt, buying a debt, whatever, we deliver a very clear and simple message. Invoice through FOB.money and get paid early. So that's how it works. It's invoice with a built-in payment. You submit a pre-invoice on the platform. You have offer from the platform and commitment. You ship the goods, you get the payment, and the collection we do ourselves from the buyer. So actually is a very typical invoice financing or factoring scheme, but repackaged into the form easy to sell to SMEs who are not financially educated people usually. We do have some magic, like early commitment for funding. We don't have a notice of assignment because the invoice, the new kind of invoice is a notice of assignment itself. We're a container of contracts, and we are actually not only the FinTech project, we are FinTech, legal tech, and trade tech thing. So the financial model is quite simple. We work in both ways. We're a matching model, like a marketplace for big invoices, where we connect the client with the big financing companies, invoice financing companies. And we can do also in-house funding for smaller invoices. So the market itself is huge, 5 trillion underfinanced. If we look at APAC and narrow down to exporters, is 800 billion, and 400 billion is like half of the market they're doing with deferred payment terms. We target 0.5%. So we're targeting to finance 2 billion a year. Actually, it's not a lot. So we are game changers because we're doing smart funding technology, easy to digest. We simplify economical, financial, and legal flows, and it has all the chances to become the new best practice on the markets at this moment. We did quite a good progress in the last year, because 2023, I left the London company. In autumn 2023, we went to Hong Kong FinTech Week to present the concept to test the industry. We got a very good response. So we were noticed by the Singaporean and Swiss incubators. So in January, we did a comparison in Hong Kong and London. January, we onboarded the incubator in Singapore. In April, we got angel funding and we launched MVP. In summer, we launched 2 advertising campaigns. We got a bunch of clients, like 250 clients in the pipeline. We couldn't digest because we don't have capacity for that at that moment. And last year in October, we were admitted by Hong Kong Science Park. This is the governmental incubator program. And so we launched first financing in Q4 24, and we got the collection maybe a week ago. So the whole thing is working. Incorporated in London, in Hong Kong. So in investors, we have Tenity Singapore, Angel Investor, and Hong Kong Science and Technological Park. We are 4 people currently with 2 outsourcers. I have a marketing background and 3.5 years in invoice financing. Vasily is our COO. He has a huge experience in telcos with a project up to 300 million and up. Chris Groves is our chief legal officer, and we definitely need him in our team. So happy to have him. He has a lot of experience in international venues and high-tech companies, and Oleg is our CTO, who has his own, for example, application on app store with like 8 million of downloads and maybe 2 million of revenue already. So that's what we are doing. And I don't know, appetite, right. So what we are raising, we're raising 1.6 for 20% of equity, currently for platform developing, marketing, sales, and risk teams, and from 7 to 10 million as an operational money for the first 3 years of operation to grow up.
All right.
Yeah. Do I have more time? No? Or
No, yeah. Time's up.
Thank you.
Thanks so much,
Okay,
Alex. Great presentation.
Okay.
Let's move to the Q&A, and you will talk more about, of course, company. So, Marcello, do you have any questions, comments?
Yes. Thank you for the presentation, Alex. Can you just mentioned that in Q4 you had the first, let's say, product delivered. Can you walk us a little bit through how, like, what type of invoice are there, and like who are the investor on the other side, and how did you originate that?
Sorry, you're talking about the first deal?
The first deal, yes.
Okay, that was so we are focused on 3 areas to test the thing: Vietnam, India, and Europe. So the first lead that was realistic to finance with without a significant risk coming was the company in Germany importing solar panels. So actually, this is the thing we're in digging in now, because this is a huge market as well. For example, the companies, engineering companies installing solar panels all around Europe. This is a huge market. They all work with deferred payment terms, and we are looking there maybe to have us offspring to that direction of financing. So we financed it with the credit line we got from one of our investors. So it was in December, and it was for 90 days, and it was matured a week ago. So we got the money back and sent them back to investor. So that's it. Currently, the situation is that we have 250 clients in a pipeline. All these deals went through our hands. We know them more or less. For example, we have a Vietnamese exporter that has 30 million of capacity to cover at the moment. We understand that the way how SMEs are financing their deals is really a spaghetti thing. Bigger companies already established. But for sure, this part of the market will be digitalized sooner or later. And we would like to be the part of that movement. Yeah. Did I answer your question, or?
Yes, thank you.
Yeah, thank you.
Thank you. Douglas, do you have any question?
Yeah, so you're providing sort of factoring at scale, and you mentioned that one of the benefits is there's no notice of assignment, but usually the other, if you're not assigning, having the buyers pay you direct, you typically have access to like sweep accounts for the sellers. Like, do you have that kind of ability to sweep an account, or who is taking default risk or non-payment risk?
There is no dedicated notice of assignment. The invoice itself, the new type of invoice we create, is a notice of assignment, because in the invoice we use 3 parties: the seller, the buyer, but the bank account where the buyer has to return funds is the bank account of the platform. So he knows it from the beginning, seeing the invoice. And this is actually the approach to the buyers. So for the advertising campaign, when you come and say, look, there is a 3-party invoice, don't be afraid of that. This is a new best practice on the market. It means that this shipment has been funded by us.
And you take the risk on non-payment?
It depends on the size of the deal. If we work as a marketplace and pass the deal to the big guys take care of that. If we do in-house funding, like for invoices up to 300, 400,000, we do the risk assessment ourselves. And that is why we need the funding at the moment to build our risk team. Because we use several sources, we are linked to several databases and scoring systems and to shipment tracker systems, whatever. But we have to grow the team, to grow the professional risk team, to do the risk assessment for that.
Thank you.
Thank you.
Thank you, Douglas. Andreas?
Yeah, I think that was super helpful. Thank you, Alex, for that presentation. What will be crucial is the historically high risk nature of SME export financing, and the fact that you're dealing with cross-border transactions. The risk management framework would be like fundamental, I think, to understand particularly to your sustainability. Is there anyone in particular in mind that you're thinking of bringing on in order to sort of manage those, that underwriting and the risk assessment methodology that you will employ?
Yeah, we have the structure, the structure that we have in our plans. There are certain positions we need to fill in. In general, the good thing is that we keep risk on buyers mostly, and a part of that's why actually we created the one legal entity in London and one legal entity in Hong Kong. Hong Kong is the sales office actually, and London is the collection office. So London works in the jurisdictions that are very well achievable and controllable.
Got it.
All right. Yeah. Thanks so much, Alex. That's a good presentation.
Thanks for listening.
Yeah, absolutely. All right, then. Now we are moving to the final presentation. Final company is Stonestep, and Brandon Matthews, CEO of the company, will share the opportunity with us. Brandon, yeah, you shared your screen. You can start when you are ready.
Good. It's up. You can see it.
Yes.
Great. I'm Brandon, the founder of Stonestep, and today I want to talk to you about how we're helping banks and microfinance institutions not only survive climate risk, but also create new opportunity. Every decade, the physical costs of climate risk double. For 500,000 community banks and microfinance institutions, that's not just a financial risk, but ultimately an existential one. The current unmet need is $150 billion, which is less than 10% of the total production gap measured by Swiss Re. Adapt Risk software automates the climate risk response for community-based finance institutions, delivering actionable insights with seamless integrations and on-premises control, so banks can act before the next disaster hits. Banks that don't use tools or don't adopt tools like Adapt Risk are left guessing about their climate exposures, and those guesses are getting more expensive each year. Everyone's heard that data is the new oil, which is exactly why banks hesitate to share it. We've flipped the model around, bringing the algorithm to the data, not the other way around. This protects privacy and speeds up adoption, overcoming one of the main obstacles that we've seen in market adoption. The software provides banks both with the knowledge of their real exposure to climate risk and proven tools to reduce their inevitable cost. It builds on our proven Eiger platform used today by banks, microfinance institutions, insurers, and e-commerce companies across Asia Pacific, and more recently in the United States. Last year alone, it managed 48 million new policies after handling over 70 million the year before. Our target segment, community banks and microfinance institutions, it's overwhelmingly underserved. Only the biggest banks are getting attention on climate risk while the risk continues to escalate. Our business model is replicable and defensible, and we're unlocking a whole new route to market for parametrics, a new form of insurance, basically derivatives sold as insurance, fundamentally changing, I believe, how risk transfer can work. We bring decades of experience in risk, technology, and scaling businesses. I built billion-dollar divisions of both AIG and Zurich and led a UN-backed climate facility working together with 70 different finance ministries. Daniel led Zurich Asia Pacific and managed PE-backed portfolio companies at BBB, an impact investor in Asia Pacific. Our CTO, Fahim, holds PhDs in both AI and information systems, built the Eiger platform, and has been with us since 2018. Banks that aren't preparing now will be forced to find solutions soon. Regulatory momentum virtually guarantees it. We're not just delivering software, we're building infrastructure to connect community banks to the next generation of climate risk transfer markets, and we're ready to do it now. So, That's my email, and I'll be very happy for your inquiries, questions.
Thanks so much. Thanks so much, Brandon. Andreas, what did you think? Do you have any question?
Thanks for that presentation, Brandon. And I think you're in such an important space, to be honest, given everything that will continue to go on as we, move into the rest of the decade and the next. My question is, to start with, have you thought about how much you could potentially charge for a solution like this towards your customers? Have you tested ACVs? Presumably it'd be a straight SaaS fee, right? Because that makes sense for this for this product. But it would be interesting to get your sense of what you've learned so far.
Yeah, totally. So we actually see the software as the foot in the door for a broader strategy, which 5 minutes would be too short to go into it.
Sure.
It's marketing the parametrics to investors that are sourced from the local financial institutions, because climate risk anywhere needs an offset somewhere else. And so the big problem that's coming is that there's not enough risk diversification to deal with this stuff. So the specifically to your question, low price on the software because it's replicable and we want to get it implemented. The money that moves with parametrics is actually, that's the big ticket. That's where the billions are.
All right. Marcello, do you have a question?
Yeah, more on the fundraising history on one side. So if you raised capital before, and what's your plan for the future?
Sure. So we did raise before. That was sort of in the InsurTech trend, and that was from XL Innovate. Part of they eventually got acquired by AXA. XL Catlin got acquired by AXA, and they closed down the fund. I was able to buy our shares back, so we're now completely management owned. And the plan right now, we've been bootstrapping. We've got clients, we've got things going. We also, through our work in emerging markets, we've been able to use different grants and government agencies and what have you in order to build up some scale. 50 financial institutions in Nepal. Not a place that would be attractive for investors, but it's a place where it's important to do this stuff, and it allows us to sort of train what we're doing and knock the kinks out. We're looking to raise because it's the US market and other developed markets. There are 5,000 credit cooperatives or credit unions in the US. These types of institutions are also across Europe. The dollar sizes are bigger, and that's why we want to raise.
Thank you, Marcello. Douglas, do you have any question or comments?
Yeah, Brandon, are you able to do any back testing on the model to demonstrate its explanatory power with respect to the climate risks that you're trying to help offset?
Yes, absolutely. And so what's interesting here in on the risk transfer part. So the first part is, what is the actual risk? The margin of error on any parametrics, it's sort of everybody's in the same range. The real cost of doing risk transfer comes down to the cost of capital. So that's where that second stage is going to come in. So yes, we can backtest on the parametric modeling that we do. It's almost more important how we then later link this to market, because the real charge is more what a reinsurer, capital provider, or derivatives market is going to charge more than the margin of error on the scientific analysis of the parametric frequency. I'm using insurance language. I hope
that's fine.
Pretty straightforward.
And then just on the parametric side, so like travel insurance, a parametric insurance product in travel is pretty straightforward. The flight is canceled or it's delayed by X amount of time. It triggers the payment through the policy. What's an example in your world? Because it seems like it's a little bit more esoteric and sort of vague as to like what would be a very specific demonstrable trigger with respect to climate.
Totally. So what we're doing in Nepal is flood. It's river water level, and when it floods upstream, it floods downstream. Rainfall, wind speed, any heat days, heating and cooling days, all of these are using open source data and fully parameterizable, I guess. But I like that you know about travel, because that's exactly right. I firmly believe that this is the future of risk transfer, because as there's more data, and now that the regulations have changed to accept not just indemnity, which is I need to prove that I own this thing and that this loss happened to me. Rather, you can use inference. Well, inference is what AI and data is good at. So that's why we're going towards acquiring a position in this market through the institutions that reach people that are, frankly, most people, if you're not insured through your employer, you're probably not really insured. So to really expand the network of people who are able to access these types of products. But we're starting small, so it doesn't start with selling people insurance. It's much more helping the bank to put triggers into their loans, so that if an event happens, that they can immediately defer loans, say, yeah, we've got a policy for that, it's cool, you can pay us back in 3 months, to make emergency lending more available, to also trigger the banks to do adaptation lending. So it's pretty climatey, but it's a big problem. There is then this future of different savings products that bundle in the parametric risk element. But we can see that down the road once we've got more installs done.
Thank you.
Thank you so much, Douglas. And yeah, any more questions from advisors? Maybe no. Okay. Brandon, do you have any final words before we close?
No, just thanks.
From the part, yeah. Thanks so much, Brandon. Great to have you with us. All right, that's all for today. Thank you so much, everyone, staying with us until the end of the event. Special thanks to our advisors, Andreas, Douglas, Marcello, all the investors and presenters, of course, FeenPi, Radivision, Realizio, FOB.money, Stonestep. You will receive post-event follow-up email early next week. So thanks so much. Thank you, advisors.
Thank you.
Thank you so much.
Thanks.
Thank you.
Thanks, everyone. Good to see you. Okay, bye-bye.